Hello guys and welcome to this YouTube video.
Today, I'm going to run through Great British Pound Chef, and that's going to run through Great British Pound JPY.
Let's get into it.
Right, so this is Great British Pound CHF. On the weekly chart, just looking at key levels in the market. So we've got a key level here at 1.175 and a key level here at 1.22. As you can see, we were making bullish structure with a high, low, but then we failed to make that high, and we did break below. As you can see by these three red crows, we're now in bearish structure. On a daily chart, we can clearly see an uptrend which has been broken, came back and retest, and formed the evening star. So we can clearly see we are now start forming bearish structure. Zooming in on the 4 hour and 1 hour, we get to see this a lot more clearly. Another thing I want to highlight on the daily, we did have this big bearish engulfing candle, breaking structure on the left and obviously structure here. And as you can see here, from the 19th to the 26th, we were corrective. We were ranging within this market at the key level at 1.175. So as you can see here, we were just moving sideways. Market didn't know what to do. But as we now have this bearish engulfing candle, we now have a clear directional bias, but we can now trade off. And zooming in, we get to see that a lot clearer. 4 hour, as we can clearly see, if I get a brush, we'll be making this bearish structure with lower highs and lower highs. So now we can predict that we can now come back, retest this area, this key level in the market. As you see, we had a rejection across here and here, to come back, retest this, and then for another further continuation to the downside. What we would need to see on the 1 hour, what we would need to see, just some clear pullback, maybe Fibonacci level. Yeah, so if we do pull back from this area in the market, you can see we've got a clean king Fibonacci level 38.2. So if we do pull back to this level, get some nice 1 hour candlestick formation, maybe some nice wick rejection around here, then enter on a bearish engulfing candle, we can then enter and take this short position. Targets is unknown, but I'll just be trailing the stop loss, because as you can see, if you look left, it's not really clear targets, not really much reversal levels around here, apart from the 90 rate on the daily. So for targets, I'll just be trailing it and then waiting for that to be hit. And then, yeah, that's about it.
Okay guys, so I'm going to go through Great British Pound JPY. So to start with, looking at the resistance level on the weekly chart, we can see resistance across here at 147.5. Let's type that in. And we can also see a support level in the market at around 127.5. 127.5. Let's write that in. And we also have a mid-range zone within the weekly chart. So where I can see that is I can see these wick rejections across here, here, here. So this is a key level in the market that we need to take into consideration. So if I just highlight this mid-range zone at around 140 in the market, that is where we can draw our mid-range. So we have this. And now if we look at the market at the current moment in time, we can see the rejection of this mid-range zone, and not exactly, but good enough. We can see we had a massive engulfing towards this level with a complete rejection straight away, huge weekly candle to the downside, followed by another bearish engulfing candle to the downside. And then the most recent week from last week, we can see how price failed once again to push up to the upside and then end with a huge wick to the upside. Jumping down to the daily now. So what can we see jumping off of this mid-range zone in the market? We can see we've had this bearish momentum and bearish push to the downside. So we've had all of these red candles followed by where the market has tried to make an even star. As we can see, the market slowed down with this doji, followed by this green engulfing candle, but it didn't actually engulf, because as you can see, it didn't engulf the wick. It didn't engulf the indecision in the market. And then straight away after that, we had this bearish pin bar, another continuation to the downside. And then again, we tried to push up. As you can see, we did engulf on this daily candle here, but straight away we formed a doji, so another indecision candle, followed by a few smaller candles. And then finally on the Friday, we had our engulfing to the downside. So this is just showing that we are in bearish market structure, as the market is just pushing down and failing to push higher. And what does that look like on the 4 hour chart? Well, it's just continuing to make these impulses and corrections. So we've had this impulse to the downside, and then we've had this retest of support turned resistance. Again, we've had this push to the downside, and then we've had this retest of support turned resistance again. So last week, how was this market moving? Well, we pulled back and then we did reject. But as you can see, the market was quite messy last week and we was moving sideways. As you can see by the candles on the 4-hour, we've got a lot of wicks flying about, a lot of dojis. As you can see, these ones here, very, very small candles, not a lot going on. So you don't want to be trading this market straight away off this pullback, as we've retested around 1.34. So jumping down to the 1-hour chart, we can start to look for our entries and start to see what was actually going on in the market, and a lot more zoomed in version. So we retested this level and then we impulsed, and we did actually make a lower low in the market, this level, but then we came back, okay, we made a lower high, but then we struggled to make a lower low. So we struggled to continue with the bearish momentum in the market. So we struggled here, and then we kind of went up, but we didn't break the last higher high. So we just stayed in the exact same place here, and then again struggle to make a lower low. So as you can see, the market is squeezing. There's not much going on at this moment in time. The market, there's no clear direction, so we don't want to get involved. And what we can see, if I just draw in with this trend line, we can see how the market is squeezing, something like this. That's how the market's moving. We had this impulse to the upside, and now we are sort of stuck in this pennant formation. And then finally on Friday, the pound pairs had this downside momentum. We had this movement to the downside. So we can now start to trade. As we can see, the market is trending to the downside. We can begin to look for our selling positions. And of course, that's going to be in the form of a retest or a pullback up to a significant level. And where would that significant level be? Well, if we maybe put on our Fibonacci retracement tool from our last swing high around here to our swing low, we can look at potentially pulling back to the golden zone of 0.618 or potentially the strong trend of 0.382. So for now, around this level, because it looks it looks better at the 0.618, but like I said, anything can happen. So let's draw a zone in at 0.618 around this level, around here. As we can see, it does line up with where we've been rejecting the market previously. So that would be a nice place for the market to pull back. If we pull back to here, and then at this level, if we start to see some wick rejections, some bearish candlestick formation, such as an evening star, we can then look to enter short. Targets, we could start to see some rejections around this last daily low here. So if we get a pullback, we want to make sure that our risk to reward at this level is at least 1 to 3. So yeah, it looked like it could be if we get a nice risk reward, because coming past this level, then we can look for further downside movement past that level. We can look for a further move, break below this level, and then we can look to pull back to that level to then look for some further downside movement. Don't need to be greedy on this trade. As long as the risk reward is there, we can take our profit to this level and then target anything else once we get a break below this level. So yeah, that's a Great British Pound JPY going into next week.